Bitcoin?
Bitcoin is
Bitcoin.
Hey hotties, let's talk about Bitcoin.
It's almost 65,000.
Cryptocurrencies going mainstream.
A brutal week for crypto investors.
Founder and CEO Sam Bankman-Fried has announced his official resignation.
Fortune favors the brave.
Bitcoin took the world by storm in 2021. Everybody was talking about it. It was going to change the world. But it seemed like everyone was always focusing on the price of Bitcoin. It was trading at $11,000, now $20,000, $30,000, could it hit $60,000? Oh, now it's falling, now it's up again, now it's falling. And as of making this video, it sits around $26,000. As you can see, the number of searches on Google and the price of Bitcoin almost perfectly match each other. Was the price of Bitcoin just hype? Or was it fueled by a belief in a future where crypto makes people's lives actually better? There has to be a practical use case, right? This isn't just tulip mania but with digital coins, right? I remember how people would tell me that this isn't just a hype cycle because cryptocurrencies are going to change the way finance is done. But that's about as far as videos got as far as explaining the actual business use cases for Bitcoin or other cryptocurrencies. There is a lot of information out there on potential uses for Bitcoin. Some are very reasonable and frankly good ideas, and some should probably never leave the drawing board. So today, in this video, I'm going to show you 4 of the most likely use cases for cryptocurrencies like Bitcoin. How using a cryptocurrency like Bitcoin is better than the current system. After all, why would you switch to some new risky tech if it doesn't do part of the job better? And what's keeping each of these solutions from really taking hold. For the record, I'm not super pro or anti-cryptocurrency. I do have a little bit invested, something like 0.5% of my portfolio. This video though is going to try and impartially look at the potential use cases for crypto, and then you can decide for yourself if you think they're good use cases or not, and if crypto is going to do well in the future or not. But before we jump in, if you enjoy learning about business and personal finance, do you and me a huge favor by clicking that little subscribe button. It's 100% free, and you'll be more likely to see the well-researched videos that I produce on a weekly basis. Now let's get into understanding what the business use cases of Bitcoin and other cryptocurrencies are. The first major use case of Bitcoin is to be able to send money across borders quicker and cheaper than current methods. These cost and time savings would benefit both individuals and large institutions. Let's start with the individuals. According to the World Bank, in 2022, hundreds of millions of migrants sent about $630 billion back to their families in their home countries. These international money transfers are not cheap. On average, globally, currency conversions and fees on the transfers amount to about 7% of the money sent. So if you're getting paid minimum wage in the United States and want to send $100 back to your family in Nepal, you're paying the equivalent of 1 hour of your work to do so. For comparison, internal US transfers like Venmo don't take a cut at all. International transfers like this are not only expensive for individuals, but are also slow for individuals and institutions. International money transfers usually take 1 to 5 business days. This is obviously pretty annoying for individuals because the person I sent the money to can't actually use the money for several days because it's being transferred. Bitcoin transactions can be settled in minutes, and even if you're using a third party like Circle to send the Bitcoin, the fees are more in the 0.5% range rather than the 7% range. For institutions, the money saving aspect is probably not as enticing as the immediacy of getting access to the funds being transferred. One problem that companies regularly have to face is managing their capital. If you're wondering what that means, it essentially boils down to answering these 3 questions. 1, what money does the organization have? 2, where is the money? And 3, does the organization have access to it? Bitcoin has the potential to quickly and cost-effectively answer all 3 of these questions. When a company engages in a crypto transaction, the transaction remains in a locked state until it's completed, usually within a couple of minutes. This locking feature prevents the possibility of double spending. This locking feature also makes it easier for businesses of all sizes to keep track of their inflows and outflows. On the other hand, in the case of traditional wire transfers involving normal money, the funds move out of one account and are not accessible for several hours or sometimes even several days. This time lag occurs when the money is being transferred, processed, potentially even converted into another currency, and finally verified as received. During this period, the money is considered unavailable funds for both the sending and receiving parties. This delay has several disadvantages. It creates short-term liquidity issues as the company's treasury and finance departments await confirmation of the transfer and can lead to missed opportunities because your capital is all tied up. To a degree, for people in institutional finance, going from traditional money transfers to crypto transactions is a bit like going from paper letters to email, or going from normal shipping to that crazy fast 1-hour grocery shipping that Amazon offers in some places. The economic incentives are there for both individuals and corporations. Individuals want cheaper transactions, and corporations want faster transactions, and Bitcoin can do both. Once firms can mitigate the risk from volatility and regulatory uncertainty, you will probably see a widespread adoption of use of cryptocurrency transactions for international money transfers. The second major business use case for cryptocurrency is creating asset-backed tokens. This tokenization of real things is economically valuable because, like with the money transfers talked about earlier, it can really speed up the process of trading. For example, you could digitize assets like precious metals, homes, or cars. This essentially means that in addition to your physical car or home or whatever you're buying, you would also have a digital token that represents your ownership of your home, car, or purchase. Buying and selling something like a home or car takes a lot of people spending a good amount of time to make it so that the transaction can go through. It usually takes weeks for you to actually get the title of your car in the actual mail. Also, side note, it's kind of crazy that in 2023, we still rely on having physical pieces of paper as proof that we own a car. With a tokenized asset, the buyer would pay you in Bitcoin or some other cryptocurrency, and in return, they would get the house and the token for the house. This would all be recorded on the blockchain. Once this process is widely adopted, it would significantly reduce the closing costs when buying a home, and would reduce the waiting times for deeds and titles. An additional advantage of digitizing assets is that it would potentially open up markets to people who previously wouldn't have been able to participate. Take Apollo Global Management, which is an alternative asset management company that has been super successful in private equity. If you want to learn more about them, I made a video about them, you can click right there. They are so big with almost $600 billion under management that it really isn't worth their time to meet with doctors, lawyers, or anything else like that with a couple $100,000 they want to invest. They need multi-millions for it to be worth their time. But Apollo has seen historically high returns across its 30-year lifespan, so if Apollo found a way to tokenize one of its investment funds, they could theoretically open it up to all accredited investors, and they wouldn't have to spend all the time and resources on individually transferring hundreds of $250,000 wire transfers or checks. And on the doctors and lawyers' ends, they would love to get access to a company who has seen average net IRRs of 25%. Usually people talk about decentralizing finance on the low end, a couple $100 range. But I think you will see people like BlackRock and Apollo Global Management doing it for accredited investors first for two main reasons. First, investing in crypto technology might not be worth it for the investment firms for only getting $500 investments at a time. But it could be worth it for $100,000 investments. And secondly, and probably more importantly, there are legal rules around who is allowed to invest, and you must be considered an accredited investor to be able to invest in certain funds. In the long term, we might see versions of this trickle down, but it will likely stay in the world of accredited investors for a long time. Before we go into the last way businesses could use cryptocurrency like Bitcoin to improve business operations, we need to talk about one use that will continue to see widespread adoption, but isn't necessarily as pretty, and that's buying goods and services that are restricted by the government. Whether we like it or not, one of the first real-world use cases for Bitcoin was buying illicit goods such as drugs and guns on the dark web. The reason why this is possible is that Bitcoin is a decentralized and censorship-resistant payment method. No authority can stop transactions from occurring on the Bitcoin network, since it's maintained by thousands upon thousands of miners and node operators across the globe. So even if the US government tried to shut down every single Bitcoin server in the US that it had access to, there would still be thousands across the globe that someone wanting to skirt the laws could use. And while the use of Bitcoin for buying drugs, guns, and counterfeit currency definitely makes a really attractive, flashy headline, Bitcoin's censorship resistance also enables more honorable use cases. For example, somebody living in an authoritarian regime could use cryptocurrency to pay for web hosting services and publish anti-government content. They couldn't do this with normal currency, as their government would likely sanction them. And just as a kingpin could order his drug supply using Bitcoin, a group of freedom fighters could use it to pay for AK-47s to overthrow a tyrannical dictator. Side note, since Bitcoin is so public, many people wanting to maintain more privacy use a token called Monero. Now, according to all the information I could find, illicit activity is a tiny percentage of total used cryptocurrencies. The highest rate has been 3.37% of transactions in 2019, with only 0.15% of transactions in 2021. Which, to be fair, 0.15% is still nearly $14 billion, so it's a lot of money. But the point is that the majority of crypto is used for above-board legal reasons. The last likely use case of cryptocurrency is banking the unbanked. Estimates range quite drastically, but a very conservative estimate is that about 23% of the world, or about 1.7 billion people, don't have access to bank accounts. This could be because they live in a very rural environment and getting to a bank is logistically difficult, or because their country is in a time of political instability, like think Lebanon right now, and people just don't trust that the banks will actually remain solvent and give them their money. Or it could be that their local currency is experiencing extreme inflation, like Turkey, or even hyperinflation, like Venezuela, and it's just financially better to barter. As smartphone technology proliferates and more people get access to the internet, it's very likely that someone will be able to have a cell phone well before they have access to a bank. Cryptocurrencies, specifically stablecoins, could help these people who don't have access to a bank account get bank-like services. A stablecoin is a cryptocurrency that does not fluctuate widely in price because it's pegged to a fiat currency like the US dollar. Banking with stable cryptocurrencies would be a good way for these unbanked, oftentimes very poor people to save money without the fear of a bank collapsing, inflation eating away at their savings, or not being able to physically get access to the bank. Now, if you're thinking, wait a second, these people are oftentimes really poor, making only a couple of $1,000s a year, why would any institution want to invest in helping them out by creating a crypto app that they could bank with? Well, essentially, the strategic thought process here is targeting mass non-consumption, and then expecting the non-consuming group to have a loyalty to your services as they move up the ladder. For example, if there are 1.7 billion people that are unbanked, and you can get 10% of them to use your service, even if you only make $1 of profit out of each user in the first year, that's still $170 million. But over time, as their income increases, maybe your profit goes to $6 from $1. Then you'd be making $1 billion off this non-consuming group. So how soon will we see these 4 use cases? Well, most of them are already being implemented in small pilot programs across the world, but there definitely are some significant roadblocks in the way, whether it's regulatory in nature or the extreme volatility of most cryptocurrencies. The future of practical business use cases of cryptocurrency on a wide scale is probably still a ways off. But I could be wrong. If you feel like I missed something in my analysis, be sure to let me know in the comments below. Or if you have any questions, you can also put that down there too. Now, if you like this video, don't forget to subscribe. Thank you guys so much for watching, and I'll see you guys next time.